Hello class, this is Dr. Sharma again. I'm going over the problem-based learning activity number 3 requirement. Now in this activity you are going to analyze the income statement. Now remember we downloaded the income statement, statement of cash flows and the consolidated balance sheet as part of your problem-based learning activity number 1. So again, we are going to go back to that Excel file. But first, let me go over the requirement and then we will talk about that Excel file. And I'll also demonstrate how you complete that exercise. Now, okay, in this, first you're going to copy the entire income statement of the company into the worksheet and name it as 3.1 because this is PBL activity number 3. Convert all the figures for year 2 and year 1 into percentages. Now this time by dividing each line item in the income statement by the total revenues or total sales, whatever is the nomenclature your company has used. And this is known as the vertical analysis of the income statement. Now then what I want you to do is calculate the net profit margin times interest ratio and gross margin ratios. Now I'm going to talk about those formulas and while demonstrating in the Excel file. Then in the Word file, like you did for problem-based learning activity number 2, that you will define the net profit margin ratio, net interest times interest ratio, and then the gross margin ratio in general. Then number 2, you will discuss these 3 ratios calculated for year 2 and year 1 and then explain the significance by comparing them with the year 1 ratios. Then number 3, in the Word file, the third paragraph will be which one of the 2 years is the company better prepared in terms of profitability in view of the ratios calculated above and the vertical analysis of the income statement. So that's the third paragraph. So both Excel files and the Word files must be submitted. The Word file should be written in a paper format in 3 paragraphs, define and discuss, and then finally the analyze part. So these are the 3 things that you'll be doing in the Word file. So now let me bring that Excel file and show it to you how you go about doing the vertical analysis and calculating the ratios. Okay, so this was the file we had. Now you will also be having your own file. I'm using ExxonMobil, so that's why this is the ExxonMobil. Now ExxonMobil calls it a consolidated statement of income and statement. So what we are going to do is right click that tab and move or copy and start a new book, and remember to click create a copy. Okay, so as you can see, book 3, this is the copy of that. So let's rename it as worksheet 3.1 and do the calculations. Now the first thing we are going to do is we are going to clean up some of these. First, since we're doing only for year 1 and year 2, we are going to remove the third one, that is the oldest one. So you can just hit delete. So, and then next thing you're going to do is you're going to insert, and on the top you're going to write 2021 percentage as you did in the previous worksheet as well, 2020 percentage. Okay, so that's the heading. Now we have the percentages, we have the figures. Now the first thing that we are going to do is in this income statement, the most important item is this total revenue and other income. So that's the total. Sometimes it will be given as total sales, sometimes it's given as total revenue. So just find that out. And then the next thing that you have to understand is anything This is selling and administrative and depreciation. Anything below this are expenses which are not part of the cost of goods sold. So remember that. So all those starting from the selling expenses till the what you call total cost line item are not cost of goods sold items. So the cost of goods sold are only these items for your case. So the mark is that when you see general selling general and administrative expenses, that means it is not part of the cost of goods sold. Sometimes cost of goods sold is directly given to you. If you are given, that's good. Sometimes they call it as cost of sales. So just remember those terminology. Cost of goods sold or cost of sales. If you're given directly, you'll be using that. If not, we'll have to do some calculations. Anyway, the first thing they are asked to do is convert all these into the percentages. Again, do the same thing as we did previously, equal to, and select this. You can, it's B2 divided by, now I'm looking for total revenue or total income. So this is total revenue or total sales. So this is the line item I was looking for. Now, as I said to you in the previous one, I have to make these as an absolute reference. So that's why to make that, I can put a $ in front of B and $ in front of that number. So you'll have to do that by going up to the formula bar. Again, remember here it's coming dollar, it should be percentage. So that's why I'm going to put that as a percentage and increase it to 2 decimals. Now, once you have done the absolute, you can just click and drag down and all these percentages are automatically calculated. Now you can just check this reference. That is, if you see the Excel is dividing this item by this item, that's good. So next is this item by that item, and as you can see, this item it has divided by the same item. That's what it's supposed to do. So now, as I said to you in the previous case, this total revenue should be 100% if you have calculated everything correctly. Let's do the calculation for previous year. So this item divided by, again we're looking for total revenue of that particular year. So that is that item. Now for the second item, I need to put a $ in front and $ in front of the number. So that's the absolute. Okay, so this one again, let's do the percentage, make it to 2 decimals. And then I can drag it down till here. Okay, so that is all that you need to do for the vertical analysis. Same thing I did in the previous video. We check whether it is fitting in one page or not. No, it is not. It is going to the 2 pages. So we want to be in one page. So go back to that normal view again. Drag these, and you can also reduce this. So now you can see a marquee here. It means that's the page. So we are fitting that in one page. That's all that we need to do, because we don't want it to go to another page. Okay. Now down here, what you're going to do is you're going to calculate the 3 ratios. Now the 3 ratios I said to you was net margin ratio. Now that is net income divided by total revenue. So that is your what called formula. So in this case for 2021, what we are going to do is, remember, we are going to look at this first item of net income which you see. So this is the first item after the tax expenses. That is the first item. So that is the net income I'll be interested in. Divided by, because you know this is total revenue. So that will be, okay. So since it's coming in $, we want in percentage, go up here and change it to percentage, have 2 decimal places. Now you can see this calculation is it's exactly the same, because that's the same thing we are doing. So you should get this number here as well. Now you can copy this cell and put it here as well. So that will give you, okay, now what does this mean? It means that in the previous year, when I sold $100 worth of revenue, I made a loss of 12.81. Now I'm making an income of 8.26. So that means my profitability in terms of net income has increased from the previous year. So as compared to 2020, in 2021, I'm doing better in terms of net profit margin. Now, next profitability, we're going to look at the gross margin ratio. Now, this is cost of goods, or some people say cost of sales, cost of goods sold, divided by total revenue. Okay, so now cost of goods sold here, it is not given to us directly. So that's why what you have to do is you have to do some calculation. So let me just put an equal to sign first. First, I'm going to, sorry, this is not cost of goods sold. This should be total revenue minus the cost of goods sold divided by total revenue. So that is the gross margin is total revenue minus cost of sales divided by total revenue. Okay, so let's see. Total revenue, of course, let's put a parenthesis. Total revenue is this item here, right? Minus, now we are not given the cost of goods sold or cost of sales. So as I said to you in the beginning of the video, these are these items below the revenue but above the selling and general expenses. So let me put this one here minus again this one. So that is all. Now close your bracket. Then what I'll do is divide it by total revenue, is that same figure here. So this is this one. So this is percentage. I will have to bring it to 2 decimal. Copy and paste it here. Now as you can see, in terms of gross margin, there is not much of a difference. Although of course the gross margin has improved as compared to 2020 and 2021, but we ultimately lost some money. So it means we are spending more on this other expenses. So that is what you have to understand about them. Now make sure that you look for the cost of goods sold. If it is not given, calculate that. Subtract that cost of goods sold from the revenue. That will give you gross margin divided by the revenue. Total revenue will give you this percentage. So that's the second percentage. The third and the last percentage we are going to do is the times interest on ratio. Now the formula to calculate this is net income before taxes. So that will be, you can say net income, or we can just say income before taxes plus interest, again divided by interest. The whole is divided by interest. So that will be this one here. So let's put that in the calculation box here. So interest before interest, income before taxes is given here. You can see income before income tax. So that is this figure. So since we need to do some calculation, put this in parentheses plus the interest expense. So you can see the interest expense is given here, right? So let's just put that and close the parenthesis, divided by the interest expense again. So that is your number of times. Make sure you don't change that into percentage. It should be number of times. Okay, so calculate that and copy and paste here. Remember, it should be number of times. Now, what does this show? It shows that how much of income do you have to pay the interest. If you have borrowed money from somebody, how much of earnings do you have? Now, as you can clearly see that we had a minus figure in 2020. So that means they didn't have earnings to pay off the interest. So to pay interest, they may have to borrow money somewhere. So that's not a good situation to be in. But in this case, it looks like if they have to pay interest, they can pay that interest 34 times. So that's a very good situation. Normally, any figure which is above 14 is considered as a good times interest ratio. All right, so that is the calculation that you have done. Now what you're going to do in the Word file, you're going to talk about how the net profit margin has improved, how your gross margin has improved, and how your times interest has improved, and how the company is doing fairly well, depending upon your calculations. For this company, it has improved. That's one thing. Another thing you may want to just touch upon is the expenses. The total cost are 89% and they were 115% in the previous year. So the cost have gone down. So you know there are two ways you can make profit, either controlling the cost or increasing the profitability. So now, since they have controlled some costs by reducing the expenses, therefore their profitability has increased. That is relevant in terms of net profit margin. So that's one thing that you may want to look at. Another thing you may want to look at is what is happening to each of these expenses. So this one, expenses has gone up, but since the sales has gone up, that's good, because if you don't have crude oil, you can sell gas, because ExxonMobil is a gas company. And the production and manufacturing has decreased, so that's good. You're producing more but at a lesser cost. That's good. So you can look at those expenses as well and then see what is happening. If the expenses are going down, it's good. If the revenues are going up, that's good. Okay, all right. So after having completed that, now what you can do is you can go back to the Word file and complete the requirement. So now you make sure before you close this, you save this as in the same place that you have been saving others, and probably you may want to say activity number 3 and then save it. So you have this file. Make sure it fits in one page. That's what we want. And if you look at down here, it fits in one page, so we are good. All right, so that will be all about the requirement for problem-based activity number 3. Thank you.